Welcome to Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Now, here's Ryan Sloper.
Welcome back, everyone, to another episode of Real Estate 360 Live. For those of you not familiar with the podcast, my guest and I will do a weekly podcast on all things real estate, from interest rates to the economy, to what's happening in Washington. Anything that affects your local real estate will be covered here. We'll also, digest and talk more of what's going on a national scale, but we tend to try to break things down to what it means more on the local levels. Obviously, I'm located in the D.C. metro area, so things that are taking place here in the real estate market is going to be quite different than somewhere in Kentucky, North Dakota, or a more rural area. There obviously are anomalies taking place across the country, though we have seen a pretty consistent slowdown across the country in real estate in general. We have a low interest rate environment, but yet sales still have not picked up to what I would feel should be record pace if all things, if it was a perfect world, let's just say that. The Fed is convinced that labor markets are moving in the right direction, which I believe is just a load of crap. I think they know that it's not moving in the right direction. They just have to say that it is. We'll kind of dive into Yellen's comments last week, where she spoke specifically about labor markets and where interest rates were headed as far as the Fed fund rate and their intentions, or whether they're going to raise them or lower them. We'll dive into that. We'll also talk a little bit. Louis Camerosano, our guest every week, wrote an article on Russia buying more gold reserves. We'll kind of dive into his blog post about, what it really means for all these other countries buying up a lot of gold now. Obviously, gold and silver prices have stayed very low for some time now. And obviously, in my belief, a lot of manipulation that's been taking place. But what this kind of signifies, I think, we'll dive deeper into that. We'll also give another credit tip for this week on why you should really pay attention to secured credit cards. And if you do have them, why, if you're not, using them, it could be a problem and a detriment to your credit score. If you haven't already downloaded or subscribed to the show, if you go to iTunes, you can download, share, subscribe, so you can, every week that we load a new show on there, you can get it right to your device. Also, you can stream it live at realestate360live.com. On the right-hand side, there's an Ask a Question button for any questions that you'd like or any topic that you'd like us to cover on future episodes. Joining me on our panel, as he does each and every week, as mentioned, is Louis Camerosano. Louis is a former school teacher, a former attorney, and a former general manager of a major real estate portal. Louis is often cited in the media as a real estate industry expert, and Inman News, Wall Street Journal, Forbes, Fox Business, U.S. News, Wall Street Journal, MSN, and numerous others. Louis, how are you doing today?
I'm doing grand, Ryan. How are you?
I'm doing well. Thanks for asking. So, just to kind of recap where we are coming back from last week. So we had, we always go through the economic calendar. So we always had July new home sales. We had them come in at 412,000 versus the estimated 430,000. What's interesting is that wasn't a major factor in pricing, because why? Housing is now backstage news. They could really care less as to what housing's doing. So that wasn't really much of, a shocker to anybody. July existing home sales were 5.15 versus the estimated 5.01. That was very close to market expectations. The prior period was revised slightly lower. And as far as we had a weekly jobless claims were 298 versus 300, pretty much spot on there. Continuing claims 2.5 versus 2.518. Almost everything is coming in right at the number. It could be a touch better, touch worse, but not really anything that was that significant. Now, the one thing we did have Yellen that spoke, I believe it was last week on the 22nd. Was a Thursday or Friday, Louis? Do you remember? I think it was probably Thursday.
Friday. No, it was Friday.
Friday? Oh, Friday, okay. So she spoke, and before she even spoke, basically, everybody kind of knew that she was going to, take and dive pretty deep into labor markets and what was taking place there. And kind of the gist of what I got out of her speech was that, she feels that the labor market's getting closer to meeting the Fed's objectives, which I think has been said for how many years now, Louis? If it progresses more rapidly, meaning that the labor market picks up even more than they think it is, then they could raise rates sooner. And if it slows down, then they could actually push back and hike rates later. Well, I mean, is this really anything different than what we've been, watching the whole time here? I mean, it's double speak. She's talking out both sides of her mouth. I mean, it's basically she doesn't.
Fed speak, not double speak, right?
Yeah, Fed speak. Yeah, you can't. I mean, no, she doesn't want to commit to saying anything. She should come out and say
because she doesn't know anything.
That's true. But, I mean, just judging by, like I said, we always say the eye test or anything else, I mean, the labor market's terrible. That's the bottom line. So if you really were sticking to, what you're saying here, then that means rate hikes are not going to happen for years.
And the premise, Ryan, there, though, is that somehow that these low interest rates create jobs anyway. They don't.
Correct. Yeah, I mean,
but that's their theory, that low interest rates create jobs. So if we continue to see jobs being created, well, then maybe we don't have to love low rates anymore, as if the low rates created these imaginary jobs.
Yeah, and what's interesting is that there's been all this talk in the media and in the news that now there's this huge debate within the Fed on when rate hikes will occur. Why does it matter? Well, I mean, why do people care about this? Because it's obviously proven that it doesn't matter what takes place with these rate hikes. I mean,
it's a diversion, Ryan, because if you remember, the whole issue with the Fed was that they were printing money, they were going to create price inflation, and that the deficits were soaring as a result of the Fed printing up money to buy Treasury bonds so the United States can continue to have massive deficit financing. You don't hear not a word about our deficit problem. You don't hear anything about unfunded liabilities. You don't hear anything about inflation other than it's noise. And it's as if you can print $4 trillion. Let's forget we did that. Now the issue is, what about interest rates? Whether we're going to raise interest rates a quarter point or not. They've just swept the entire 5-6 years of reckless monetary policy of printing $4 trillion as if, that's normal, because, Europe might do it soon. Draghi's making noises about that. And now they want you focused that somehow it worked. It was no big deal. That's what you do when you have a little bit of problems. For 6 years, you not only keep interest rates low, but you print up money, $4 trillion, and you buy garbage mortgage-backed securities, and you become the main buyer of U.S. Treasuries. They don't want people talking about that. And you don't even hear the conservatives or libertarians, whoever they are, that are always making noises about IOUSA and the U.S. is on a path of destruction because of the deficit. You don't hear that anymore. They've been silenced because they've been drowned out by this concept that, well, there is no inflation and the economy is improving. We have a recovery. They've beaten into people's heads that somehow the stock market is higher, and that's evidence that no one cares about deficits anymore. It's back to Cheney's deficits don't matter.
Right. Yeah, one of the...
that's why they're doing it, Ryan. Isn't that why they're talking about interest rates? To divert the attention from the fact that they just, they made a massive $4 trillion error?
Yeah, I totally agree with you. I mean, it's because really, it's really irrelevant what these interest rates, the Fed fund rate in particular. I could care less what that does. I mean, if they had any sense, they would actually be saying that rate hikes would actually be a good thing right now, right?
No, it's all like a worry. They might raise rates, and it might chop the recovery, and it might knock down the stock market.
Well, yeah, and what typically
isn't
happens,
the stock market, Ryan, supposed to be held up by earnings and held up by fundamentals in the economy, not by Fed policy? Yeah,
well, there were two specific headlines that I wanted to read to you that I thought was funny. Was because the first one...
You're trying to annoy me in the morning?
The first one was from Money.CNN. So it was a big old birthday cake with the numbers 2000 across it. And it basically, S&P 500 tops 2000 for the first time ever. This is what they want to concentrate on.
Oh, absolutely.
They want to concentrate on the stock market, concentrate on those numbers, and everybody wants to pay attention to whether the Fed's going to, mess with the Fed fund rate because they feel like that's going to tamper with their ability to continue to drive the stock market up or down. Then the second headline was over, and it was just basically from, I believe it was from Gallup, and the headline and I think it was posted on Zero Hedge, Fed's mission accomplished. Looks like the herd has turned. Most hated rally. U.S. investors' preference for what to do with an extra $10,000. And as between June 27th and July 9th, 41% said that they would invest another additional $10,000 in the market. 36% would keep it as cash, 20% buy a CD, 3% no opinion. But realistically, this has been the goal of
right.
the Fed all along.
They've conditioned people that if they go long enough and they show the stock market just goes up for years, then you should put money in the stock market.
Absolutely, and they've already helped funnel the majority of this whole ride up. So
well,
now,
by putting money in themselves, first of all, as you point out, week after week, the sovereign funds putting money into the stock market. Then, of course, the companies themselves buying stocks back. So you might as well go along with the ride because the two biggest players in the stock market are the companies themselves buying back their own shares and the sovereign funds. Why fight that?
Yeah, and who's normally, the last one to the party is the general public, right?
Oh, absolutely. They're the first ones to get hit.
Yeah, they're the first ones to get hit. And most of the time, they'll sit there and say, I couldn't see it coming. I mean, you and I have been talking about this for some time. I think at the bottom of that article, which is it's I think very great comment. It says the question is, now that the public has bought back into the casino, which way do the big boys want the market to go?
Right.
Right. And I think that this is where if they really want to clean people's pockets again, they'll let it drop down. They'll let it drop down significant, lows and make money on both sides as they always.
They have years worth. First of all, they can do derivatives, they can short, and they can make money off of that if it goes down.
Yep.
They've already made money on the way up. They've already diversified their assets into other things. I saw a thing, Ryan. I think it was in Reuters. It said the average. I really want you to take on this. This is the average household net worth is $700,000, and they showed this chart. I should have sent it to you before the call. How since 1995 to now, and it's basically kind of straight up with a small blip during, I think, 2008, that household wealth has gone from like 200 to 700,000. And I started thinking average, but that's average. But, the example of if there's 10 people and one makes $1 million and 9 make nothing, well, the average is 100,000. I mean, is it really possible that when you say average, like the man in the street has $700,000 in net worth? When you see these stories where 50% people can't get $400 together in an emergency?
Yeah, I don't know. Their definition of average might be different than ours, but that can't.
But this is what they're putting out there.
Oh yeah, because if they choose to take like the 0.1% of the rich, you know what I mean, and average it out with something else. We're maybe only counting people that have jobs and have had jobs for some time.
Well, no, you're right. If you put together billionaires, 10 billionaires with 10,000 people who make nothing, or $30,000, it looks like the average net worth is a lot.
And do you put that past them? Because
they use the word average, but I guess people don't understand the word average. They think that average is the person in the middle. It's not. It's an average between all the numbers, and in my example, which makes it pretty easy to understand, if one guy makes $1 million and 9 guys make nothing, the average is 100,000.
Yeah, and think
but
about
9 people make nothing.
Right. Well, you got the low end of the spectrum, basically the people that don't have jobs and that don't have any net worth at all. Then the other end of the spectrum, where you have the rich that continue to get richer during this period of time, right? So their wealth is increasing. The low end is decreasing. The middle class is decreasing. It really is only the uber rich that's pulling the average guy up. So if you want to say,
so the word is median. Really, is if you take 1,000 people, what's number 500 making? What does number 500 have versus the rest?
I guarantee you, it's not 700,000.
Oh, absolutely not.
Yeah,
but this is what they're putting out there to show that everything is fine. And I guess if you're not making that, you blame, and then that's what they want you to do. You blame yourself for being a loser rather than blaming the economy and the central planning and the politicians. You say, oh, I guess I just can't make it. I can't cut it because the average person's got $700,000 socked away in a house or in investments. That's not true.
Right.
According, it may be mathematically true. I wouldn't put it past them to invent that number either, but it is not statistically true that if you met 10 people, 5 of them, because that's what people think average is, and it's not, 5 of them will have $700,000.
No, that is one of the biggest farces I probably have heard in a while. That chart that was on the Gallup poll that basically showed a cumulative net buys of U.S. equities by Bank of America Merrill Lynch clients since 2008 to the present.
Mm-hmm.
What's really interesting about that is that back in 2008, like basically hedge funds had the highest percentage of net buys there, and then it was institutions, and then it was private clients, like very low in 08, 09, which we would expect, right?
Right.
But now, where we've moved all the way to like the December of 2013, the highest cumulative net buys of U.S. equities is now private clients, followed by hedge funds, followed by a steep decline in institutional buys, right? And if you can actually see this chart with these two things moving in opposite direction, retail shooting straight up and institutional going straight down, right? I think that tells a lot. Your hedge funds...
Oh, that's a rotation, right?
Yeah, absolutely. And I think that, once they make all this money on the way up, as you mentioned, Louis, right?
Mm-hmm.
They don't. Most of these big buyers, the institutions, hedge funds, they don't care if the market goes backwards. They're going to make money one way or the other. I almost think that they would prefer to have a huge decline because they can just short the market all the way through, make their money off of everybody that is now caught up in the frenzy that's late to the party. They'll make money all the way back down, and then they'll ride it back up and keep doing the same thing over and over again.
Well, what they know is that there's less room on the upside than there is on the downside. Before, there was more room on the upside, so they played that. Now they know it's the same with housing, and the same with interest rates. You really can't get interest rates much lower, and you really can't get home prices much higher. So the smart money would say you want higher interest rates. There's more money to be made on betting on higher interest rates, although take the Fed out of it. They'll try to keep them low as possible. And more money to be made on thinking prices might drop. But forget housing and interest rates because those are very tightly controlled and there's many factors. In stocks, you can boost stock prices to the moon and you can drop them down to zero. So right now, the stock market's at all-time highs. There is, even amongst people that are presumably not paying attention, there is talk out there that they're overvalued. So they can drop, and there's been talk about, even from people who aren't just gloom and doomer, saying, we could have a big correction here. Well, in a big correction at 20, 30, 40%, you can make a fortune on the short side if you have derivatives and, So you really can't expect stocks to rise 30 or 40% from here.
No.
But if they drop 30, 40%, that's the better bet.
What's interesting, too, you sit here and stare at the stock tickers. The Dow's at 17,076, NASDAQ's at 4,069, S&P's at 1997, and then you have the 10-year note at 2.39%, right?
And the Spanish and Italian at the same rate. Now, granted, the United States is not a good credit risk and should be paying far more than 2.3%, but Spain and Italy should be charging. You should need to take 20% to risk putting money in those entities. Those are
I mean, it would be
they're the same as the U.S.
Right, 23.9% or something. But I mean, there's who would want to invest in something with that type of return with the risk that's involved? And then we have
interest-free risk.
Right, and then we have oil prices at $93, and then we have gold prices at $12.88. And I want
silver under 20.
Yeah, and silver's under 20, which I think is, I don't even understand that at all. But I wanted to get your take, because I know you wrote a blog post on Russia buying up more gold and stashing away some more reserves there. I want to kind of get your take, if you can kind of give, our listeners a little snapshot of your blog post that you just wrote last week on Russia and gold, and your kind of take overall on what this kind of signifies with, more and more of these, China and Russia and other countries buying up more gold reserves where we're kind of not paying any attention to it, like everything is just hunky-dory over here, and that it really, we could care less what gold and silver does because, we have our stock market, right? And we have our dollar.
Well, Ryan, it's interesting you mentioned that. I'm putting together a blog post right now that should be out kind of simultaneously when we release this podcast that puts together the pieces. It's not just Russia that's buying gold. It's China and a lot of the Eastern nations. And the purpose of the new blog post is called The Importance of Gold to Individuals and Nations. But let's start with Russia. Since 2008, Russia has increased its gold reserves about 300%. And every month they keep adding to their gold. And they're doing that as a hedge against the United States and the sanctions. But they started far in advance before then, because even before the United States reignited the Cold War, or whoever reignited it, it's not the point, is even before there were tensions between the United States and Russia, Russia was already holding large amounts of U.S. treasuries just because they had to, because under the Bretton Woods Agreement, the petrodollar agreements, you had to have a certain amount of U.S. dollar reserves in order to buy and sell oil and to conduct international trade. That's just the way things were. And as you know, that worked fine up until 1971 because the dollar was backed by gold and people were happy using the dollar because it was backed by gold. And then in 1971, Nixon said, well, we're not going to do this anymore, so you can't redeem your dollars for gold. So from now on, the dollar is the dollar, and the dollar is strong because it is the dollar, and the United States is the largest economy, and that's what a currency is based on, is the strength of a country's economy and not whether it's backed by anything. And people didn't like that, but, they had to go along with it because the United States was the big guy on the block, and they went along with it in the United States then to make sure that people continued to use dollars, created the petrodollar. They made arrangements with all of the OPEC nations, and they said, we'll give you military protection, especially the Saudis, if you only price your oil in dollars and you only sell it for dollars. So that created a massive demand for dollars, and that allowed the United States to continue the trend that they started in the 60s, which was spending massively on guns and butter, meaning they continued to increase the welfare state and continued to increase the warfare state, and that just carried on and on. Now, other countries didn't like it, Ryan. People weren't happy about it, but everybody used the dollar, and that's how it works, so there really wasn't a problem other than people didn't like it, but no problems really in that there was no major efforts to try to move away from the dollar by other countries other than complaining about it. Then when 2008 strikes, Ryan, the United States temporarily, they bail out the banks, but then they start a temporary QE program once, twice, 3 times. Well, this starts to get people nervous that the United States is abusing its world reserve currency status by printing dollars purely for their benefit, not for international monetary stability, but just because the United States wants to boost its economy. The United States wants to continue its deficit spending. The United States wants to bail out its banks. So guess what, everybody? You still have to hold dollars, but we're going to debase them in our interest, not in yours. That started the whole de-dollarization, the BRICS, Brazil, India, Russia, and China, on perhaps starting their own monetary order, creating their own bank, and trying to do trade outside the dollar. Well, what that means is if they're going to use fewer dollars in their international transactions, that means they don't have to hold dollars, and the way you hold dollars is by holding U.S. treasuries. So they're starting to diversify away from holding dollars. And what would you hold? Well, one of the things you would hold is gold. Now, historically, all the world's gold in the last 100 years has been in the West. It's been in the Germany, Italy, the European nations, and in the United States. China, Russia, Asian nations have held very little of the world's gold. That's starting to change in the last 5 years and this is, you make the right point. People in the United States don't care about gold because either it's a case of the United States has the most gold, so we don't worry about it, but more likely it's the average American has been convinced and conditioned to think gold is, in the Keynesian concept, a barbarous relic, meaning it's the almighty dollar that matters. Everyone wants the dollar. And in a way, it's borne out by kind of the market. People do want the dollar. But in the last 5 years, people are concerned, or countries are concerned, that the dollar may not be that stable, even though in recent months it's risen perhaps to, it's strengthening. But the underlying trend of the dollar is that it's based on monetary and fiscal policies that can be subject to abuse. And I would say a monetary policy, right, that prints $4 trillion for its own benefit just to print its way out of trouble, which it probably hasn't done, and a fiscal policy which continues to do deficit spending is not really where you want to place your trust. So people know that gold can't be created out of thin air. They also know that it's withstood the test of time, meaning it's always been viewed as money for the last 5,000 years. Currencies have come and go, but people always take money internationally. So countries like Russia are adding to their gold reserves. China adding to their gold reserves. Not only are they adding to their gold reserves by importing gold, Ryan, they've become the number one and perhaps number two producers of gold. So they view gold as very, very important to the monetary system, whereas the Fed, and I point this out in the most recent blog post, have given speech after speech after speech about monetary policy and stability. They never once mentioned gold at all. But if you look at the notes from Putin and China and their central bankers, they're constantly talking about gold, adding to the reserves, diversifying their assets, acquiring gold. They report how much gold that they accumulate. Now, in America, you never hear the president talk about the gold, ever.
No,
you never hear Yellen talk about the gold. The United States people don't care about the gold, how much we have, how much we don't have. They worry about the dollar. Switzerland is having a national referendum as to whether Switzerland, as a nation, should have their gold repatriated. The United States would never even think about that. Auditing Fort Knox, that's not on people's mind. They don't care how much gold the United States has. The United States has been convinced, the citizens, that the dollar, just like the Romans were, that the Roman currency was what everything was. And we did this with silver in the 60s. Lyndon Johnson convinced everybody he was going to make the coins not out of silver anymore, and they were going to be worth just as much as before, and people went along and they said, okay, this quarter looks just like the other quarter, except it doesn't have any silver in it.
Mm-hmm.
And when you can get away with that, you do, but there's a limit to how far you can push people to accept your currency just because. Right. And that's the main difference, Ryan. And my question to you is, when does the United States... Now, there are people, if you look at the U.S. Mint sale since 2008, they used to sell 3, 4, 5 million Silver Eagles a year. Now they sell 40 or 50. That's massive, but in the grand scheme of things, 40 million Silver Eagles is nothing. It's a big increase from like a few million. Same with the amount of gold that they sell. But the average American does not look at holding gold or silver as some type of hedge. It's almost viewed as some kind of like doomsday thing. When if you look at the Ukraine, you look at Cyprus, Argentina, where they have these currency devaluations 40, 50%, if they had held gold, and some of them do, they haven't lost anything. But people think the United States is immune to that.
Right.
And, what country ever in history has been immune? You always point, what's the statistic you pointed about the fiat currencies, Ryan?
Oh,
their life expectancy?
Well, there's never been one fiat currency in the history of man that has to become extinct at some point. And
there's an average life expectancy, too. They don't last hundreds of years.
Yeah, no, they don't. And
I think it's 40 years.
Something like 40 years, and especially with the tampering of monetary policy that we have going on, it's just going to speed that up, right?
It's going in one direction.
Right.
Accommodative. When you use the word highly accommodative policy, what that means is print money and keep rates low and hope everyone doesn't notice, because the dollar is the dollar and we can do whatever we want. You could do whatever you want for only so long.
Well, and, I started thinking about this, too, the other day. So if, we've got silver prices, below $20. We've got, gold under $1,300. And back when all this started, before QE even started, and when they started bailing out the banks to begin with, is when, you would anticipate that those prices would go much higher. And then there was a lot of doomsday talk that, basically the United States was collapsing and yada, yada, yada. That's when I think a lot of
the dollar, not the United States. The dollar was.
Yes, the dollar. The dollar was collapsing, and that everybody was making, a last-ditch effort to then hop over to gold and silver. Now, many of those people that were pushing, especially people that are sellers of gold and silver, were pushing this collapse of the dollar, and I think that, they were conditioning that there could be potential, 200% and 300% returns. And what's happened is that people, when they buy these types of assets, Lewis, I think that they're expecting to be paid off a lot more quickly, right? Meaning that, they may have bought in like 08 or 09. They were hoping to be paid off by 11 or 12. Now we're in 2014, and it's moving backwards again. And they're like, I knew that guy was wrong. I knew he was just telling me that to buy the gold. So it puts a bad taste in their mouth.
And I should be back in the stock market.
Correct. And I should be back
in
the
stock market. And you're proven right then. If you move back in the stock market when gold took its initial hit in 2013, you'd have been rewarded with a 40% increase rather than a 20% drop in the price of gold.
Yeah, and I mean, I think it's quite astounding how the amount of manipulation that's taken place and how it's been able to kind of drag things out. Because technically we should be buying up gold hand over fist right now.
Mm-hmm.
I mean, it makes sense, but we're not doing that as a country. But yet we see Russia and China and these other countries that are
and the people within those nations.
Right, are wanting to triple down on gold and silver, and they're looking at it at these prices and probably like, you know what, we're gonna keep stocking this stuff up. So
right.
You know, this is.
Well, I have a chart in the upcoming blog post that shows the movement of the gold from the west to the east, and you see, 10, 15 years ago, the eastern countries had very little percentage of the gold, and that number keeps increasing.
Yeah,
and the people in the West, Germany cares. There are certain people in the West that do care. The United States citizen does not care. The only reason they cared about gold, in the last 5 or 6 years, was it was going up. That's the mentality. They don't buy gold for the right reason. You don't buy it for it to go up. Maybe you buy mining shares for that. You buy gold as a insurance hedge against bad outcomes. And they, I guess, figured, well, the risk is passed on the dollar. There are no bad outcomes. I don't need to hold 5 or 10%. That's a wasted asset. And that's not the way to look at gold. When you put gold into trading things, vehicles like ETFs, they view it as a stock rather than as a store of value.
Now, Louis, so let me ask you this. So what happens if the stock market declines by like 2,000 points? We've seen that
a lot of the gold that's held is on margin, and they'll sell that off too.
Right, and I think that this is what...
Not the physical gold holders, but but most of the gold that's held by United States citizens is in these mock ETFs.
Right, but I think this gets very confusing, too, is that, when people are watching the stock market fall and all of a sudden they're not seeing gold prices move the other direction, right? It's like, okay, well, I guess there's no reason to panic. It looks like gold and silver are staying the same or they're not moving down.
Well, they moved down. If you remember during the 2008 crisis when the stock market fell, silver and gold initially fell right along with them. In fact, silver fell even more.
Right.
But once the dust settles and you realize that the reaction of the central planners and monetary policy is to reboost and reprint money, that's when they took off. If you remember, gold and silver were, $10, $12 for silver and $700, $800, right after the crisis. And once they started QE, they went straight up. Now, if you remember, when they announced the third QE, I think is when the manipulation really started because they realized gold and silver went straight up at the announcement of QE and didn't look back for 3 years. They were concerned that if they did one more QE, and everyone was thinking they do one more QE, this is the end of this is the straw that breaks the camel's back. These things are going to the moon. And that's when the prices started to drop. And that's counterintuitive. You do another round of QE, you announce the biggest and largest QE, and the prices of gold and silver dropped. But that's what really started to boost the stock market and really started to push real estate prices higher.
Yeah, and then, out of nowhere is when they started, pulling back QE when there was actually no basis for them to, because they knew that
using their logic.
Using their logic. They hadn't done anything other than keep a low interest rate environment. Housing was terrible. Labor markets were terrible, but yet they had to continue to show the rest of the world that they felt like we were still strong. We're still the that strong reserve currency of the world, that we're going to start pulling back. We're going to
we have prudent monetary policy. After printing, that's like taking a car and going on a 3-week rampage through neighborhoods, driving 150 miles an hour, and then you slow up to a traffic stop when you see an officer. Like, I'm really a good driver here. And I want people to expect that, given the chance, when you drive away from that officer, and if you need to go, or for whatever reason, to speed again and go reckless, do you think that the Fed is done with QE? I mean, they've stopped QE before. I like to use the joke, with the smoking joke of the guy who smokes, is a lifetime smoker, and they say, "Can you quit?" And he says, "Yeah, it's easy. I've done it dozens of times." Well, the QE has been done 4 or 5 times. They've started and stopped it. You don't think that you make the point that they might not call it QE.
Right.
If they get into trouble again, they're not. They've now realized they've discovered a vice that they never really used before, which is we can always print money to solve the problem.
The only solution to them to fix any problem is to print money, right? That's the only solution.
They've learned that.
And obviously it's been stellar results. I mean, we've seen that, right? I mean, it's been just so much house buying and and so many jobs that have been created. We have
stock
a
market's up,
economy now. Stock market's up. And you know what? If you remember, Lewis, I can't even remember how far back, but remember I told you that the stock market would not go down on Obama's dime? Remember I told you that?
You told me the economy, not just the stock market. The economy would not. Well, because you're right, Yellen wants to get reelected too, and she needs a Democrat in there.
And it's working out perfectly if you look, because, I mean, we've got these records taking place in the stock market. And so when Hillary goes to run and when Yellen goes to rerun, they can just point to the one thing that matters the most to them, which is the stock market. They can say all they want that the labor markets have turned, knowing that it's a flat-out lie. It's a lie.
What did she start her speech with, Yellen? She's talking about, in the 5 years since the Great Recession, the economy's made right. Because it's considered recovery. And she starts talking about more jobs have now been created in the recovery than were lost. She doesn't talk about their part-time jobs. She talks about the unemployment being lower. It's only when you get like 9 or 10 paragraphs into the speech that she talks about the labor participation rate, and then she kind of tries to dismiss it because of an aging population. They're making all this stuff up. But people are buying it because those are numbers that people can understand. Unemployment rate. They don't understand labor participation rate. They don't understand. Why don't you start telling somebody, well, we created jobs, but 800,000 were part-time, but we lost 500,000. The people are like, well, what are you talking about? There's a net 200,000 jobs created. That's all they know.
Right.
They get away with it.
Well, you know what's funny, too, is that all the talking heads on, like, MSNBC, CNBC, all these different places, they don't have a choice but to go along with everything they say, too. And you know, anybody that's ever on those shows, Liz, I'm sure you've seen it, if they ever challenge to go against the system or to question anything about it, they're laughed at. They're laughed at like this guy.
Or not invited back, or they scoff. You know, when people talk about the stock market, if you went on CNBC, they didn't know who you were or I was, and we said we thought the stock market, the Dow was going to go to like 40,000.
Yep.
Okay, why do you think that? If you went on there and you said, well, I think gold's going to go just to 2,000. Why would you think that?
Right.
You know, they make a big chuckle out of it, and you say, well, it went up the last 12 years, only went down 1 year, and it's going up again this year. They don't want to hear that. They have a vested interest in it. They get paid to promote the stock market.
Right. Not to mention, just like based upon your article, do you guys think that it matters that Russia has increased their gold supply by threefold since 2008? Do you not think that that's a problem?
No, they don't. They think that Russia is a country masquerading as a gas station. That's kind of where they pointed out. That somehow, you know, if they want to go out and buy trinkets, let them. But what they don't realize is the world view of the United States claiming, like Nixon did back in 1971 by fiat, that what a currency means is the strength of a country's economy is what makes the currency valuable. Or even using his definition, that would mean then China's currency should be worth almost as much. And you can't have that. So that definition doesn't work anymore. But it's an improper definition. Currency should have universal value, and that's why they want gold. Because they know, look what happened to the Soviet Union. When you and I were growing up, that was going to be forever. We were going to be stuck with the Soviet Union, and there was a policy of containment. They went out of business overnight. Why did they go out of business? Because Reagan's foreign policy was to spend them into oblivion. Well, it's not like the United States isn't spending itself into oblivion. And you can see how countries can come to bear on forcing us to spend into oblivion by, for example, if Russia and China don't buy any more treasuries and dump them and have these trade sanctions, then, well, the Fed will buy them. Well, that's how you print yourself into oblivion, because you can't just print money and expect there to be no consequences. Well, we've done it so far. How many trillions can you print before the system says basta, enough?
That's the million-dollar question, Lewis.
I'm surprised they've been able to go this far, because there's already this de-dollarization. And I see people in the media, they scoff at it. Oh, who wants to take a ruble? Well, Iran does. Who wants to take yuan? Well, Europe will. You know, there's facts in their face. It's not like they want to try something and you're scoffing at them before they try it. They've tried this. The percentage of international trade that takes place with dollars has declined from like 78% to 65%. It doesn't take much more for there to be a snowball effect. People say, why am I holding all these dollars when my currency will work, or some combination of a basket of currencies will work, or maybe if I just buy up some euros or whatever other currency, I can use those.
Right. Yeah, and I think that, this is something that's, it's going to take some time. But, I mean, if these...
But it's heading in one direction, though.
Yeah, but if they continue to stockpile their gold. We can care less about it. Our stock market can't continue to climb like this forever. We can't continue to print money like this forever before there's a group of countries, of powerhouses that align themselves and just basically decide to crush us. I mean, economically, because we have no sound basis of anything right now. I mean,
when have you heard the United States is increasing its gold reserves or even cares about thinking about that? We haven't talked about the gold that's in Fort Knox. No one wants to audit that. No one even cares that it's there or not.
No.
Is there any? The president of China and Russia come out and they talk about their gold reserves. They talk about the importance of increasing them. You never hear. The United States doesn't care less. I don't even think Obama was even briefed on how much gold. I don't think it's an issue to them. Their whole thing is how to protect the dollar. And it's basically by ignoring and trashing gold. That's it.
Yeah, I guess they feel like avoiding gold at all costs because they know that essentially that this Ponzi scheme that's been run for so long is they have to continue this for as long as possibly until it just fizzles out and we're done. I mean, because they've let it go so far, they're not going to reverse course. They're not going to come out and say, they're not going to change their stance. They're not going to start, stop their spending. They're going to just keep continuing to increase spending, even though they're going to say that they're going to decrease it. Next president will come along and they're going to say they're going to do the same thing. They're not, because they can't.
But if you look at what immigration was to bring people in for labor and sell them the American dream, so they will work harder to increase the productive capacity of the United States. So a lot of immigrant labor, helped the United States, win World War II by going into the factories and doing all that work, immigrant children and so on. Now they want to bring immigrants in, not necessarily to work, but to vote, and to vote for the policies that don't go for increasing production, but go for increasing spending, which means you come, we give you benefits, we give you health care, and then you vote for us. So the politicians have learned that there's a different incentive that works to get them elected, and that is spending, and borrowing. And the banks that control the politicians, which are I think the majority of the politicians that control, through the banking lobby, want more government spending because the banks make money in arranging all that debt and selling that debt, and they want, more deficits. Right. And if you create debt, if you think about Japan and Europe, they can't boost their economy by military spending. Why? We don't allow them to have a military. So, whatever increase in GDP we have over theirs, strip out the military spending. Yeah. And we don't have any increase in GDP. But that's all spending, that's government spending.
But isn't it like the most basic elementary thing that if you actually, got rid of and just had a flat tax, and I'm not even saying I'm for just a flat tax across the board, but just by doing that and giving, a fine line of what it is in the market, that there's not this, confusion over healthcare and all these different things, that companies are going to actually be more productive because they're going to hire more, they're going to be more productive, they're going to be willing to take more risks instead of not knowing what's going to take place, the overall threat of a declining dollar, of more regulation. I mean, they could.
The Dallas Fed said that yesterday. They said that things were going down because companies said they were cutting back on spending and hiring because of the Affordable Care Act.
Well, and if they're telling you this, if the rich are telling you this, the people that are producing jobs, that have the ability to produce jobs are telling you this, then how, as a government official, can't you listen to them?
Because they don't have as many votes. And that the people that what you call job creators, a lot of people scoff at that, but they're not the ones that have the political power. The banks do.
I agree. And
so they don't care that somebody's creating jobs. Those people don't vote enough, and you can create more voters a lot more cheaply instead of appealing to the people who are creating jobs by creating voters.
So then you could actually argue that the banks and government don't want a productive country.
No, because as long as they can because a productive country creates other wealthy competing interest groups. If companies are making more money and are on the rise, they can then vie for political power. What they want is total, oligarchical control over the government, which is banks. And this is what Thomas Jefferson warned about, that once you have, central banks and banking in the government, they will impoverish the rest of us.
So basically, there's no way out at this point then, because
people have to. The reason there's no way out is that the population doesn't understand the dynamic. People look to their own interests. So if all you do is appeal to people's interests, they're going to follow their interests and they're going to vote and think along the lines of those interests. The media is going to follow along. Look, if you're a reporter and they tell you this is the story you got to report, and you have a $140,000 a year job, that's the story you report.
Right.
There's no incentive for you to go out and say this story is bullshit. I'm not going to report on it. I want to report on something else. And it's the same with people who don't have jobs, but they get government benefits. They don't care that the banks control that. You tell someone, the banks control everything. Then they look at you like, okay, don't you have anything else to think about? So that's where the problem is that you keep everyone distracted, and as long as you give enough people what they need in order to vote for you, that's what's going to happen.
Yeah, but that's more my point, though. We have so many people that are reliant on the government through, entitlements and food stamps and wherever else.
Well, put that aside. Even people that are rich have so much dependent upon the government. The banking industry, they also defend the current regime, so to speak.
And that's why Yellen can get away with saying that the labor markets look like they're moving in the right direction, and everybody can just buy that load of crap. Because
the ones that are smart enough that are paying attention and understand the manipulation are also benefiting from it.
Correct. And that's
so you and I know all this, and so there's no reason why we shouldn't have been in the stock market the last 3 years. When you've been saying, you were on record saying it's going to go up. It's going to continue to go up because they're not going to let it go down. And yet, we don't have money in the stock market.
Right. Yeah.
But most people, that's what they say. Oh, okay, that's fine. I benefited from it. Why am I going to argue against this?
Yeah, it's one of I guess it's one of those things where it's like, I mean, to me, it's I don't know. It's not all about making money, right? Like, to some people it is, but I feel like when you're looking at things for face value for what they are, you're challenging every article that's written by a reporter. You're actually trying to find out the facts. You're not just looking to the news reporting that's here in the United States. You look overseas because it's typically reported a lot. It's not as biased over there for sure. So when you can kind of gather all this information, you can kind of put things together. The problem is that most people could give a rat's ass about this stuff. Correct. And as long as that continues, as long as people don't really care, and as long as they continue to let the government make all the decisions for them, we'll let the Fed make all the decisions for us, keep driving up the stock market, and then when the institutions and hedge funds and banks want to start taking everybody's money back away, they'll do it. And
what's quite amazing, Ryan, is that people who are pretty, I talk to people that are very interested in politics, very aware, and even they, you've seen it. If George Bush or someone who was on their other side of their politics did what is being done now, they would think this was the most disastrous thing that could ever happen. But you see, they put politics over principle.
Yep.
They figure, look, we're better off with these guys because they're on our side. And that's the shame of it. The people that are paying attention are consciously obfuscating the issues and saying, well, it's okay. Don't worry about it. You rarely get the principled Republican or Democrat to say, my guy is doing wrong. They're part of the problem, too.
Yeah, and
other than people like Matt Taibbi on the left, Ron Paul on the right, you don't see people making principled stands. You see people making excuses for the mistakes that their guys make.
Yeah, I mean, it's very easy for them to just blame it on somebody else. I mean, how many times have we seen a politician say, "Oh, well, that's what I have staff people for." You know what I mean? I can't know everything. And I mean,
what about what Obama says? I learned about it when I read the newspaper. I saw it in the news.
Yeah. Really?
You would hope that, you don't expect him to be in front of a computer all the time receiving news, but doesn't he get briefings?
Right. And
does he know what's going on?
Yeah. I often don't like to dive too deep into political conversations with people because, I mean, most of the time I'm arguing something that most people wouldn't even have a clue about. Just talking.
But that doesn't stop them having an opinion.
No, but then, and I'm not even talking about like that I know more than they, but like they don't even understand what the Fed does, right?
So, I know what it is.
Like, right, and they don't understand that the politics of Republican and Democrat at this point don't even really matter. This monster, how big this monster has built itself up to, it doesn't matter whether it's a Democrat or a Republican anymore. It really doesn't, because they can't fix what the Fed has started just by changing who's in office.
Someone has to run to dismantle the system, and that's never going to happen.
Correct, because then you would be running a campaign. Basically, they'd be labeled as anti-American, right?
I don't know about anti-American, extremist. Yeah, exactly.
I mean, pretty much they would. The media would pin them like that. They would pin them like, look, they're trying to rip down everything that we built, and look, we have labor markets moving in the right direction.
Of course. Well, it would be. You know, anybody who would argue to dismantle what's going on would create a massive depression.
Absolutely.
You know, if you were to say, you know what, let's just let the market decide interest rates. Let's just let the international market value our debt. Well, we'd go bankrupt because we couldn't afford the higher interest rates that they would demand.
Well, Louis, what did we say 4 or 5 years ago at this point? We said that the best thing that we could have ever done was basically let this country fall on its face. Remember?
Well, not the country, the economy, yes.
The economy, in general. I mean, people would have probably felt like they were falling on their face at that point, because it would have been somewhat of a depression. But
that happened in 1980, 81, if you remember.
Yeah, we would have recovered by now. By 2014, 15, we would have already started more than a recovery at this point, and we wouldn't be having the same conversations that we've had for the last 4 or 5 years that were basically, these are the lost years. Now, how long
1920 you had that. You had the Depression of 1920. There's a good Tom Woods video on that talks about how there was a depression. The government did absolutely nothing. Within 8 months, it was over. The 33 depression carried on because both Hoover and Roosevelt tried to use the government to, reignite the economy. That doesn't work because you put the money in the wrong place. You don't know what you're doing. You're misallocating capital based on political decisions, not on where the economy would naturally go.
So the question is, okay, we're in 2014 right now. We know the next election doesn't take place for a few years. So can this train continue to 2016? I think it can. I think there will be like dips in the stock market back and forth. There'll be money siphoned off from these banks and institutions, taking money from retail investors. But I don't think that anything significant, barring something internationally, if they can mastermind enough between these huge countries that are, depositing huge gold reserves at this point. I mean, there could be something like that happen that could, derail this whole process. But I don't know.
The only way the United States gets thrown off track is it loses its dominance. Because if you control 75% of the cards in a game, you can get your own outcome. The only way you can lose is not necessarily by luck. It's by somebody else grabbing another 10, 15% of your cards. Then it's a fair battle. But if you think about it, if the Fed's job, there's where people, they just miss the entire concept when they say, oh, they would never manipulate gold or silver. They manipulate the price of money right out in the open by setting interest rates.
Right.
They say they're responsible to create monetary policy, to create jobs.
Right.
They are full out admitting their job is to manipulate markets and to do it legally. But somehow when you suggest they might manipulate a small side market, everyone's, they wouldn't do that. No, that's conspiracy theory. It's not. They can't have the legal right to manipulate monetary policy and then not be able to go and knock off the threats to what they're doing.
Yeah. Well, I mean, we could argue, Louis, that by raising the Fed fund rate, that actually helps, the elderly, because then they'd be able to probably put their money into CDs and things like that and actually make some sort of a return. Like the savers could make something. So there's an argument on the other side that says that, you know what, why don't we start raising these rates and stuff? You know what would happen?
There's an argument. Why should they be in charge of raising or lowering them in the first place?
Exactly. And why is it okay? I mean, but now the banks, of course, the banks and the stock market, they don't want them to raise the rates because they're basically able to borrow money at nothing and make as much money as possible right now.
Right.
Now, the average Joe, can they borrow money like this? No. Nope. Can't happen.
Brian, I see it. I've been in the real estate market the last couple of weeks, talking to participants, talking to people that are actually buying, looking myself. And it is people, some of the good properties go right away if they're fairly priced to cash investors.
Yep.
So it's not even like you even have a shot, even if you could get a loan.
I know. It is frustrating. I mean, and it's people are sitting around.
This is all over the country. I'm talking to people.
Oh, yeah.
Not just in my area. And this is what's happening. These investors are going around, and if they have cash, they get the properties. If they don't have cash, someone else does and gets the properties. But it's not like there's massive sales going on. It's just selective properties that just go right away. The rest of the homes just sit on the market.
Yeah, I mean, and it's very evident. Like I see it all the time. Like if it's a property that, if it's a 3-level house and there's a one that has a finished basement, turnkey, ready to move into, and the other one has a lot of work to be done and has an unfinished basement, that one will sit on the market forever.
Unless an investor comes in and buys it.
Correct, and they'll buy it.
But he's not going to buy it at the lower price.
Exactly. He'll buy it at a discounted rate where he can go in, he can do the work, and make it turnkey to potentially put it back on the market,
right.
or rent it out. And so, this entire economy is built for the rich or people that have tons of cash at their disposal to really be able to access to it, take advantage. But the majority of people don't. They don't have access to money like this. It's so unfortunate. I mean, that I honestly think that there are people out there, especially self-employed people that I know, that should be able to get loans and they can't. I mean, they've got
not enough for them to vote. Right.
Yeah. Right. They've got $500,000 in the bank. They're asking for a $250,000 loan. They can't get it.
Yep.
I mean, it's stupidity. I mean, it's just.
But there's lots of those people, but there aren't that many of them.
Correct.
So it's easier to say, well, this guy has a part-time, 2 part-time jobs. Maybe we'll give him a loan.
Yeah, but then they want to know and that's why nobody wants to ask the questions. Why isn't the real estate market moving? Because the people that are willing and able, they can't get a loan even though they have the means to pay it back. Right. And then on the other side of the equation, there's the people that have jobs, but they haven't had them long enough. They've got 3 part-time jobs. They don't have a down payment. But you know what?
And maybe maybe they shouldn't be buying a home anyway, because maybe they'll lose one of their part-time jobs, or maybe they don't have enough income really.
Yeah, but the irony of that, Louis, is that those people are more likely to get a loan than the person that's
right. No, absolutely.
And it doesn't make any sense to me. They could basically be new to the workforce. As soon as they get a year or 2 under their belt, they're more likely to get a loan than somebody that's been self-employed for 10 years, that's got $500,000 in the bank. They can't get it. So
correct.
That in itself completely, it just has has my mind completely screwed up that can even happen. And back when there used to be some common sense approach to underwriting, but that doesn't take place.
But that shows how much the government controls because people don't loan money on common sense guidelines. They loan money on government guidelines that are written up or designed to be politically driven rather than economically driven.
Yeah,
it's not based on credit. It's based on politics. They're trying to get loans to as many people as possible, not to the highest qualified people, because if you went for the highest qualified people, you make fewer loans. So they try to go to where you can get the most loans, which is with perhaps the fewest qualified, which is where you get the most votes.
Right.
Unfortunately, that's not even working. They didn't manage to put that together right, so now they want to lower standards even more, not realizing the fallacy of their policy to try to do this. Now they're talking about lowering rates, coming back with arms, and no name. What do you call it? No income.
Oh,
stated income loans. Those types.
No doc. Yeah.
No doc. Right.
Well, and it's already started to work its way back into the system. Like I said, I mean, I've started.
It's not going to help though, because there's not enough people with even any income.
Well, no, and not to mention that we've had a pretty significant boost in the prices. We haven't had wage growth that's been anywhere close to that. I mean,
none.
the rich have gotten richer, but the average Joes, the average person that's out there that they claim has $700,000 net worth, their incomes have probably gone down, if not lost their job.
And their net worth, I'm sure, if you not look at the average, but you look at the mean, has gone down. yes, maybe the 401ks have gone up, but for the most part, most people, I use the word most and numerous, don't put away $10,000, $12,000 a year in their 401k IRA.
No.
They might put away one or two, and yeah, that's gone up. They lost money in 2008. It's gone back up.
Right.
But these are people that have $20,000, $30,000, if any, in retirement. Well, they say most people, like 40, 50% of people don't have retirement funds. So where do you get the $700,000 average?
Yeah, somebody was deciding to be funny that day, I guess, because that's just a joke.
Oh, they're trying to promote, that the economy's back. Look how wealthy our citizens are.
Just imagine all the people. Just imagine all the people reading that don't have two pennies to rub together. Right? What are they saying? Well, 700,000. That seems like. If
the average person had 700,000, we'd be walking around like the people we were in the 1950s, where one guy would go to work at an average job, have 2 cars in the garage, his wife would have a housekeeper, he'd have 4 kids, he'd have no trouble paying for all of them, and he'd own his house. That's how wealthy the United States was in the 50s.
Oh, yeah, but we probably wouldn't even be having these conversations right now if that was the case. Because you know what? That means it'd be a very productive economy. We'd actually have people that could care less if they lost their job. They could be able to go find another one. They've got cash reserves they're sitting on. It's so far from the truth it's not even funny.
Exactly.
I mean, people are looking for their 3rd and 4th jobs just to survive. So and then they're still worried that they can't even afford their new medical care, even with their 3rd and 4th job.
Right.
So
it's $1,000 a month for a family of 4.
It's literally insane. I mean,
and with like an $8,000 deductible.
Right, but yet how they can't afford that $1,000? How are they going to afford to put another $1,000 in their 401k or savings account?
Yeah, or to have a mortgage. And then also to pay not just the mortgage, but the property taxes, which have gone up because the prices of the homes have gone up.
Yep. Yeah, and one of the tricks, and this has been happening around in my counties around here, is I get the question all the time. How come my taxes jumped up $500 this year? They said my taxes. They said my tax assessment only went up by $5,000 from last year. I said, well, they get really sneaky because all they have to do is just change the tax rate, leave the tax assessment alone, so you don't complain as much. See, if you raise the assessment up too much, and even if you lower the tax rate, people can come in and dispute the assessment, right? But
what they can say is that they're improving their services or increasing them.
Exactly, and you can't really argue that. It's very hard to appeal that because that's their tax rate. They're not changing.
You also
their
can't say that they have to pay more because they don't. That there's inflation because there's no inflation, right?
Right.
So why do they get away with raising taxes? That's what governments do.
Yeah, it's a vicious cycle. I mean, it's been taking place for some time now. Louis,
you have a credit tip?
Yes, I do. I have a credit tip. That's what I was going to squeeze in real fast. So this week's credit tip is basically, let me pull it up here, as far as online disputes. So if you were going to dispute an item on your credit report, many people want to be able to maybe do that online. The credit pros don't like anybody disputing anything online. And basically the credit bureaus have made it very easy for consumers to dispute these negative items online, but it's not basically to help consumers. It's meant to help themselves, meaning that you may be giving up some of your rights under the Fair Credit Reporting Act by disputing online, which is actually making the credit bureau's job more easier. And the credit pros say 2 things. Number one, when there's a paper trail, is always better. So with online disputes, there is no paper trail to show evidence of the details of the dispute. Versus if you sent something in, like via snail mail, and if you hired the credit bureaus to write the legal letters that get sent out that don't just get scanned by some auto machine, that's one thing you want to pay attention to. And the second thing is time. The credit reporting agencies do not have time to process an online request. An online dispute is processed via electronic scanning system that I just mentioned through eOscar with verification automatically forwarded to the data furnisher. The restrictive 30-day clock is accomplished easier if everything is automated. So basically, you're giving them more outs. You're giving the credit bureaus more outs by trying to do everything online versus actually physically, hiring a company like the Credit Pros. I can give you their phone number, 800-411-3050, to handle this process for you. Now, once again, most of these tips that I give you, I had no idea about either. So this is not information that they make readily available to consumers. Would you agree with that, Louis?
I never heard of it.
Absolutely. I mean, credit.
You point out that they make it sound like they're doing it for your benefit. Oh, it's easy. Make your claim online. Yeah, so it benefits us.
Correct. Because then you're giving up more rights. You just made their timelines and their guidelines a little bit easier, so they can potentially not respond to you or come back and just say, hey, no, that we checked this item, looks good, versus actually doing it, working through a company that actually knows the law. And
they have to pay attention to them.
Yeah, you actually have to pay attention to the guidelines, pay attention to what's taking place, and that's why I don't ever recommend going about this on your own. I know I would not. So once again, guys, if you're looking to get your credit scores up to buy a home, to get a mortgage, and your credit scores aren't where they need to be, work with the credit pros. 800-411-3050. You can ask for Damon, and he'd be glad to take care of you. But if you guys have any other credit questions for us, feel free to go on Real Estate 360 Live on the right-hand side, ask a question. The guys over at the Credit Pros are great. They'll give us any information or questions that we have answered directly here on our show. So, Louis, thank you for coming on. If you give our listeners your blog and your contact information, that'd be great.
Great, thank you. Smallgold.com, SMAULGLD is our blog site. And if you go there, you can get blog posts each week on gold, silver, real estate, the economy, and the Federal Reserve. And we also post all of the Real Estate 360 shows there in the YouTube format. So please check it out.
Great. Thanks, Louis. Appreciate it, as always. Thank you guys for tuning in. We'll be back again next week. In the meantime, download, subscribe, share on iTunes. Search Real Estate 360 in the search bar. Also, you can stream the show at Real Estate 360 Live. Until next time, guys, take care.